Welcome to the Explainer. So, you've looked at your annual income and probably wondered, where does all that money actually go? Today, we're going to follow your income on its fascinating journey through the Malaysian tax system. It's a path with a series of filters that reveals how much you really end up paying.
Let's start with a big question. Imagine you earned a solid RM100,000 this year. Logically, you'd think LHDN taxes you on that full amount, right? Well, the answer is nope, not even close. The number you're actually taxed on is often way lower. And we're about to see exactly why.
The whole secret lies in this 5-step process. Let's call it the tax funnel. Just picture it. All your earnings get poured into the wide top. At each stage, a filter sifts something out, making the amount smaller and smaller. By the time we get to the very bottom, we're left with one final number that actually gets taxed. That's your chargeable income. Let's break down how we get there.
Okay, let's dive into the first part of this journey, figuring out your aggregate income. We're starting at the very top of our funnel.
First things first, we throw everything in. And I mean everything. Every single ringgit you earned, whether it's from your main salary, a bonus, that side hustle you've got going, or some rental income, it all gets pooled right at the top. This is your gross income, and spoiler alert, it's the biggest number you're going to see in this whole process.
Now, to make this all feel real, let's follow a case study. We'll call him Encik Amir. His annual salary is $85,000, he got a nice $10,000 bonus, and he also brings in $12,000 from a rental property. You add all that up, and his total gross income is $107,000. That's our starting point.
And boom, here's our very first filter. To get to what's called adjusted income, you can start deducting certain expenses. But, and this is important, there's a golden rule. The expense has to be wholly and exclusively incurred in the production of gross income. That's a direct quote from the guidelines, and it's absolutely key for any business or rental income you have.
So what on earth does that actually mean? Well, it's pretty simple. Think of it this way. You can deduct the cost of fixing a leaky roof at your rental property. Why? Because that expense keeps the rental income flowing. But you can't deduct the cost of your daily commute to your 9-to-5 job. The tax office sees that as a personal cost of living, not a cost of earning your salary.
Let's go back to Encik Amir. He spent 2,000 RM on things like repairs and quit rent for his rental unit. Since those are allowable expenses, we get to subtract them from his rental income. And just like that, his 12,000 RM of gross rental income shrinks down to an adjusted rental income of only 10,000 RM.
The next little filter helps us find the statutory income. Now, this is mainly for business owners. It's where you deduct things called capital allowances, which is basically a way to account for the wear and tear on big-ticket items like company cars or machinery. Once we figure that out for each income source, we just add them all together to get our aggregate income.
Now, here is a really important point, especially for most of us who are salaried employees. If you don't have a side business with major assets, you probably don't have any of these business deductions for your main job. And what that means is, for your employment income, your gross income is your statutory income. They are the exact same number.
So let's look at Encik Amir's numbers. His statutory income from his job is the full $95,000. Then we add his adjusted rental income of $10,000. That gives him a total aggregate income of $105,000. See that? We started at $107,000 and we're already down by $2,000.
Okay, on to the next section. The power of personal reliefs. If that first part was just a small trim, this next step, well, this is where we really start to make some big cuts.
All right, you're going to want to pay close attention here, because for the average taxpayer, this is where you have the most power to lower your final tax bill. This step is all about you claiming deductions for your personal expenses, things for your family, and even for improving yourself.
And the government gives you a whole list of these reliefs to claim. You get an automatic RM9,000 just for yourself, then you can claim for your EPF and life insurance, medical bills for your parents, courses you take to get new skills, and even lifestyle things like buying books or paying for your internet. Every single one of these chips away at your taxable income. So we take all those reliefs you're eligible for, add them up, and then subtract that total from your aggregate income. And what we're left with is the single most important number in this whole process, your chargeable income. This is it. This is the number at the very bottom of our funnel. It's the amount that LHTN will actually use to calculate your tax.
Let's see how huge of an impact this has on Encik Amir. We start with his $105,000 aggregate income. We take away his $9,000 self-relief, his $9,500 EPF contribution, and his $3,000 life insurance premium. Now look at that drop. His final chargeable income plummets all the way down to $83,500. That's more than $20,000 lower than his gross income.
But wait, we're not quite done. For Muslim taxpayers in Malaysia, there is one more, very unique and incredibly powerful feature, and it comes into play after your tax is calculated. To really get this, we need to understand the huge difference between a relief and a rebate. A tax relief, which we just talked about, shrinks your income before the tax is even calculated. But a tax rebate? That's a direct ringgit-for-ringgit reduction of your final tax bill. It's basically like having a cash voucher to pay your taxes with.
And this is exactly where zakat comes in. Here in Malaysia, your zakat payments are treated as a tax rebate. The rule is crystal clear. Zakat directly cuts down the amount of tax you have to pay. It doesn't just lower your taxable income, it literally pays off your tax bill ringgit for ringgit. It's a game changer.
All right, let's put all these pieces together. It's time to look at the whole picture and see Anchi Kamir's complete tax calculation from the very top to the final number at the bottom. And here it is, the full journey. Anchi Kamir's aggregate income was 105,000 ringgit. After we subtract 21,500 in reliefs, his chargeable income drops to 83,500 ringgit. Based on the tax rates, the tax on that amount works out to be 7,745 ringgit. But now for the final move. He applies his zakat payment of 2,500 ringgit as a direct rebate. His final tax payable to LHDN? Just 5,245 ringgit.
This whole tax funnel, from all the business deductions and personal reliefs, right down to the zakat rebate, it really shows you the philosophy of Malaysia's system. It's a careful balancing act, isn't it? On one hand, you have taxation to fund national development, and on the other, the system formally recognizes and integrates social and religious duties like zakat, which is so crucial for social welfare.
So when you see this entire journey, from that big, scary number at the top to a much smaller, manageable one at the bottom, it's about more than just filing your taxes, isn't it? It gives you a much clearer picture of the financial ecosystem we're all a part of. So the question to leave you with is this. Now that you've seen the full picture, how does it change the way you think about your own financial responsibility?